Finance News now. Here's David Chow. Hi, David. So some house price figures came out today. Big rises again.
That's right, Roz. It went up by a lot. In fact, it was the biggest monthly increase in 32 years. So not since October 1988 have we seen such a big rise. So it's basically driven by record low interest rates, and that's boosted demand, and there's not enough supply to meet that demand. So a bit of FOMO is driving all this property action, or fear of missing out. So here's a handy graph which will show how everyone's capital city went. So as you can see, Sydney saw the biggest gains. The median price went up 3.7% to $928,000. That includes houses and apartments, but if it's just houses only, then expect to fork out more than $1.1 million on average. So Adelaide here saw the slowest growth, but still went up by a very sharp 1.5%. And the national median price is also at a record high. So Sydney, Melbourne, Hobart, Canberra, Brisbane and Adelaide prices have also hit their highest levels ever. And earlier today, I spoke to Tim Lawless, the head of research at CoreLogic, and he's expecting property prices this year to go up by 15 to 20%. But he says it's only a matter of time before regulators step in to cool down the housing market. So Tim, pretty much everyone I've spoken to is expecting property prices to shoot up by a lot this year. ANZ, for example, recently said it expects capital city prices to go up 17% this year. So do you think there's a bit of an affordability issue here?
G'day, David. Well, absolutely. When we're seeing housing prices rising this fast, even if you just annualise the quarterly rate of growth, you're getting annual growth that's up above 20%. At a time when household incomes aren't doing much at all, especially now that a lot of the income support is wound out of the fiscal environment. So affordability is absolutely going to be on the radar through 2021, especially in markets like Sydney and Melbourne. You mentioned in Sydney and Melbourne, both reaching new record highs, but the median house value in Sydney now up above $1.1 million really highlights some of the challenges that non-homeowners are going to be facing getting into the market.
So on the spectrum of forecasts, how much do you think house prices will go up by this year? What's your perspective on that?
Well, we're not expecting this spectacular rate of capital gain can last much longer. I think just naturally affordability constraints will slow the market down. But ANZ's come out with a 17% prediction on growth rates for the year, which doesn't sound too far from the mark for me. Personally, I think we'll probably see housing values rise somewhere between 15 and 20% over the year, unless we start to see more firm signs that there could be some sort of credit intervention coming into the market, which, as we know from previous rounds of macroprudential, that has had a fairly immediate dampening effect on market activity.
So the point on intervention you raise is pretty interesting. Do you think the regulators will be forced to intervene at some point this year, like APRA having to increase lending restrictions, or perhaps we might follow New Zealand, which recently announced it would abolish its equivalent of negative gearing?
Well, I think it's becoming more a case of when rather than if. The timing of any sort of credit tightening is highly uncertain. But I think what is becoming increasingly certain is that it won't be because housing prices are rising so quickly. Both the RBA and APRA have said repeatedly that it's not their job to control housing prices. But if we do see household debt rising more materially, or we start to see some slippage in lending standards, that's where we'll see a reaction from the regulators, is my view. And that will probably be aimed very squarely at controlling household debt or keeping more riskier types of lending to a minimum.
So I've got one last question, and we're going to be really quick on this. So property prices have gone up pretty much everywhere in Australia. So how's the rental market going? Not as strong, is it?
Well, the rental market's really fragmented. If you're in Perth and Darwin, absolutely it's strong. We're seeing rents rising at more than double digits annually. But if you're in the inner city apartment precincts of Melbourne and Sydney, rents are down between 5 and 8%. So very different conditions on depending on where you are and what type of stock it is.
Actually, now my final question for you, Tim. Another interesting point. Capital city prices, for the first time in your figures, they've actually risen faster than regional areas for the first time in a year. What's the significance of that?
That's right. We've been seeing regional markets well and truly outperforming the capitals up until March, and that gap has been gradually narrowing over the first couple of months of the year. It does look like as the inner city markets and the more blue chip areas of the capital cities start to become alive and more people are returning to work, demand seems to be coming back into the capital cities a little bit more strongly. So it'll be interesting to see if this trend continues, but we are still seeing strong growth conditions across the regional markets. It's just that the capital cities have accelerated a little bit faster the past month.
Tim, thank you very much for your insights.
Thanks, David.